G'day everybody, how you doing? Thank you all for coming along, and I'm going to be having a talk from John Robertson, who is provides the licensing for the Ideal Financial Group, and hopefully you can see my screen. Just be allowed if you can hear me and see my screen okay. Give me a bit of notice there. And thank you. Okay, so it looks as if you can hear me. John says he can hear me, and we'll go from there. Great, thanks, Stephen. Well, welcome tonight, and I'll go through a quick disclaimer and warning, and you'll see here the disclaimer and warning is prepared by Ideal Financial Group, a corporate authorised representative number 299753 of Aruda Proprietary Limited, AFSL 338674, and a desk trading proprietary limited. This is general advice which does not take into does not constitute financial product advice and does not take into account your investment objectives, financial situations, or particular needs. Prior to seeking advice from Ideal Financial Group, you should obtain and consider your financial services guide and consider the product disclosure statement issued by and available from i-deal.com.au prior to investing. Minimum commission, interest, platform fees, dividends, variation margin, and other fees may apply. Ideal and Adest have made every effort to ensure the accuracy of the information as at the date of publication. Ideal gives no warranty or representation as to the accuracy, reliability, or completeness of the information. To the extent permitted by law, Ideal accepts no responsibility for any errors or misstatements, negligent or otherwise. The information provided may be based on assumptions or market conditions and may change without notice. To the extent permitted by law, blah, 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 you can read all of this. So, you should also decide whether you can afford this financially, emotionally, whether it meets your objective need of investment objectives and suits you psychologically, emotionally, and financially. I'll put on to you now John Robertson of Ideal. Now, John has been involved with the licensing of the Profit Hunter Group really since the start. We have recently changed back to licensing with John, and if John's ready, I've just made him presenter, and he can speak with you now, and it'll probably take 3 to 5 minutes and explain what he does. He is, in effect, he's a broker. He knows all about the Profit Hunter Group trades and the way things work and the way I think and work. So he pays attention. He sits in the webinars and knows what's going on. So I'll hand it over to you, John, if you're okay. And John was a floor trader at the SFE. He was also heavily involved, I believe, in the chess, the setup of chess for the stock exchange, the ASX, a number of years ago, and worked for the State Bank of New South Wales. And we call him JR, or John Robertson. I think that's a nickname he picked up on the floor back in the days when Dallas was the Da Vinci was a famous TV show. Now, John, you are muted. So if you can't hear me, there you go, unmute yourself and I'll mute me, and I'll talk to you soon. Yep, go for it. Okay, ladies and gentlemen, John Robertson. Thanks, John. Thanks, John. The old timers back from prehistory. I hope you can all see my screen. Let me see what you're seeing. I can see everything that we need to see that is important. I call the Greece is the word just for fun, really. Greece doesn't mean anything at all. And the reason for that is that really the Greeks just should simply be left on their own to drink coffee, have calamari, go fishing, and pick, have a good time, really. I mean, we should just leave the Greeks alone. We shouldn't lend them any money. I think we should simply buy their property and then they can steal it back off us later when they need to. That's just really got confiscated anyway. Let's move on. So what you see tonight is my hallucination for the future. It may or may not come true. Central banks willing. Use it as a roadmap to see if and when it's coming true, then press home the advantage that you have. Central banks have been ruling the roost, and we're going to have a look at what they've been doing. They're keeping interest rates historically low, and my forecast is for bond interest rates in the US, 30-year bonds, to actually rise and bond prices to fall. It can do that at this time of the year, or at least at this time of the cycle, for the reason that economic activity is getting better. People are starting to get more confidence. They're starting to build more things, buy more automobiles at very low prices, very low interest rates. Everybody, I constantly get calls from dealers saying, oh, you can get this car for 0%, and here I've got 50 million of them. And we should, in theory, be getting higher interest rates in the cards. My belief, though, is Janet Yellen will keep those interest rates fairly low in the short term. The long-term rates may start to become interesting, get a little bit stronger. Short-term interest rates, sorry, the longer-term rates may kick up, even though short-term rates stay low, as Janet Yellen ensures that a Democrat, or at least tries to ensure that a Democrat, e.g. Hillary Clinton, gets back into, at least they get a Democrat into the White House. Now, Europe started a joke, and the joke was on us, really. I want them to stop them lending Greeks money. I want them to just buy their property. It's cheap. They can buy. It's like Ireland. They can buy cheap property, as Dan was saying in the Profit Hunter Group speed webinar. One of the gold members, Dan, was saying that one of his clients paid $500,000 in for a large property in Ireland that would have cost $4 million 6 years ago. The Greeks should just let Europeans buy their property and then take them over, nationalise it later. And this is the Greek ETF, the Greece 20 ETF. And you'll remember the Greece crisis was back in 2012, and this was the low. It's coming back to that point. So there may be an opportunity soon, but you'll also notice that I've said this is an ABC pattern. Greece will never pay the money back. They just won't. There's been everything lent to the Greece, but nothing learnt in the last 3 years. Stop lending to Greece, buy their property cheap, get them out of the euro, and don't worry about them. They don't mean anything. I'm sorry to the Greek people in the audience. They're not going to. All they're going to do is spend their time hiding away their swimming pool so they're not taxed on. The Greeks' nature is not going to change overnight. They created a great civilization, and the basis of our legal systems and all of our thinking, and then the Romans took over from there. But in general, we shouldn't care. It's only $293 billion worth of debt that they've got, or something like that. It's not worth worrying about. Let them go, let them die. We shouldn't care. We all know the Dow normal forecast is to buy in mid-January, buy a dip in the third week of April, which we've just gone through, buy a dip in the last week of September. Here are long-term cycles of different forecasts. We've seen all of this. Buy a dip at the end of May, buy a dip in the end of March, and buy a dip in the last week of August. Here are the indexes which have got potential for the end of the trend. For a down move, we've got nothing at the moment. For an up move, we've got the volatility index. We haven't seen enough of the market falling out of bed in the US. The Russian stock index is of interest. Now, I don't know how to chart the Russian stock index. It comes up on one of my scans, but we'll probably go fishing for that. Dow Jones UBS livestock is ready for an up move, and the Dow Jones UBS X Energy is up for an up move. So what does this all mean? I want to show you what's going on in some of these charts, and the gold and silver members will be aware of what I'm saying in these factors. We have really some strange things going on in these markets. Firstly, the Dow Transports has shown continued weakness, but we also see that it's rallied on nothing. It hasn't quite got through some important points. So if it falls back down below 87.22 and below 8600, the Dow Transports, which is a leading indicator of what the Dow may do, could roll over. Cycle-wise, it's not likely to happen too badly. And we all know selling may go away, but when we flip back to our forecast, what do we see? We see lack of selling may and go away part, unless you're thinking about buying this dip at the end of May. This is the Dow Transports that we've been looking at. Let's go and have a look at some of the other ones. And it ratioed nicely, basically above 88.30. It's off to 90.11, and it's still very much in a range. And you can see quite clearly here, this little triangle here broke down out of the triangle, broke back into the triangle. So the top end would be 91.61. It hasn't done anything for 1, 2, 3, 4, 5, 6 months. I would like to have seen it in normal technical analysis back down to 72.63 or 76.33. Just doesn't seem to want to do that for us, but it'd be much more pleasurable buying it down here than buying a break up. Watch that level above 9200. If it blows its top, then we start looking for extreme moves in the transports. The next one, and let's look at the Dow Transports normal cycles. That might be some fun to do, just so that we know what we're doing. Now this is the Dow Transports, and seasonally it rolls over in May, as you can see here. So seasonally, for using this as an example, over here it starts in May and it dips down into June, in theory. It didn't really do that a lot over in this part of the year, but we might be up for that given that it's a little bit weaker than it was. So hopefully a rally over the next couple of weeks causes it up towards 9,000. And then another decline. Now, I talked about W. Gann's work in the email. We noticed that there's a top, a top, a top, a top. It's a fourth lower top that we've got in this particular index. When we look at something like the S&P 500 cash index, Gann talked about 3 lower tops being reason to sell. Now, Why we went short recently is we had three lower top. We had the third lower top. Here's the first top, there's the second top, there's the third top, and it needs to break down below 2072 to confirm that it's rolling over. And when does it hit its cycle period? That's early May for a decline. So last May, what it did was it basically went sideways into May, and remember at the end of May, and remember we have the wonderful quantitative easing generated by some of our friends that we would call ex-Goldman Sachs employees, and also we'd label basically socialists. We can see we're in a triangle of confusion for really the past 2 or 3 months, and it hasn't gone anywhere despite the fact that we should be heading up. So I'm confused about what this can do. In theory, these triangles break higher, but in theory, these triangles can spend your time, emotionally burn you before it goes away. So I think that we strategically, if this lower top is taken out, then we have to get bullish. If this area here down below 2050 gets taken out, then we have to get bearish for a while. In the long run, I think the cheap interest rates are going to make it easier for us, for the stock markets to go higher. I'll just get you in red there so you can see. 2111 and 2048 on the downside. So at the moment, we're in neutral. That would be indicated by a few of the normal things that we look at in terms of trends. Everything's falling amongst itself. Nothing really to love or get excited about. So the general drift is still up. Now, when we look at, that was the S&P 500. Now, when we look at the way the ratios have gone, we can see that the S&P 500 ratioed nicely on its low, which implies it could come up to this 2120 area up here. And that's entirely possible. We saw it come down and do a bit of overlap. So this is probably a fifth wave, which means up here, we might be looking to sell aggressively if this was a normal market. Now, when we look at the Dow, we see the lower tops on ratio and then a pullback. The volume on the pullback, which you can see down here, is not that flash. So the volume here is more negative. We see the range up, which hasn't been taken yet. So if this can hold, we expect down here into 17,515. Again, lack of clarity. Again, the drift is generally down, but there's not a trend. The good thing is we've got a low base ADX. I mentioned before the volatility index. Let's have a look quickly on the monthly charts before we do anything more. Now on the monthly charts, we see no breakdown yet. The first sign will be a bust below 17,579. It did this little ledge thing before. Notice there's a lack of trend, and the best area technically would be into, that you would want to go back to, would be down into this zone here, 15,277 to 15,817, if the market didn't have such low interest rates. Because we have such low interest rates, it's going to be harder. It might come back down into here and maybe down to 16,500. So again, the manipulation by the government is staggering. When we look at the volatility index, which I showed you previously, might be ready for a turn up, we can see that volatility tends to bottom in mid-April and goes up into the second week of May. So that's around here, and then slides off back down into July, and then picks up July through to October. So the high volatility season comes in the third quarter of the year. We get a little bit of a bump up in March, and the next big bump up is between basically last week and second week of May. So volatility may start to pick up. We've got some funny little patterns here on the volatility index. You might want to look to buy some volatility. And do it easy peasy, lemon squeezy. Don't get too excited about it. We'll have a look quickly at the volatility index ETF, if that excites you. Now, everyone talks about the volatility index in Australia, but I just don't get it on the charts for some reason. So on this week, for this week, the normal thing is 83% of the time volatility traded down. So you might want to buy this at the end of the week for a pop back up into early May, but generally volatility ETF is a decaying asset. So if you do take the volatility ETF, the VXX, then I suggest that you take your profits quickly if you get some. So it's got something inbuilt into it. I think it's because it's an option. It's based on options. It's got a decay, and if it comes back up to $24.66, that would be your profit taking area for that. So we talked about the Dow Jones. We talked about the S&P 500. The NASDAQ itself, we'll have a look at the seasonal cycles on the NASDAQ. We see the NASDAQ tends to pick up from mid-April and rally into early May, with still a bit of an excitement until late May, and then it backs off. So here we've seen no breakdown on the weekly chart. This is why we do the forecasting, because when we're trading, we look at it and think, oh, everything's really dramatic. But really, what we see here is a series of lows here, a new high, a new high. We don't see a breakdown. So the best point to watch is 43.33. I want to show you, and I've shown this to the PHG Gold and Silver members, and I want to show you what goes on with Friday and Monday. So hopefully I can add a few things to this. Highlight bars, and I want to show what day is Friday. Okay, and I also want to show what day is Monday. So I've got this on here. Doesn't look like it is. Anyway, we can deduce quickly what happens on Fridays and Mondays, because Monday should be the next day or the next trading day. So what we see here is this Friday, this is during the rally. Friday went up. They knocked it back down on Monday to Tuesday. Friday went up, kept it going. Friday went nothing. Friday went up, they kept it going. Friday they reversed it here, they banged it down into Monday. And this is where they started to do, I think, the bigger manipulation. They banged it down into Monday, they rallied it into Friday, They banged down Monday. They got to bang it down again and banged it down. They rallied it up once they've worked it out. They rallied it up onto a Friday. They pushed it up on Monday, got everyone excited, and then let it go down, let it rally back up into Friday, sell it off. Everyone gets bearish again into Friday itself. They buy it on Friday when everyone's bearish. They rally it up into Thursday. They sell it off on Friday. They drop it down into here. They slam it on Friday and then buy it back on Monday. And this starts the sort of behavior that I'm talking about. Slam it down on Friday, buy it back Monday. Slam it up on Friday. They didn't manage to do it, but the next Friday they slammed it down again, rallied it up. They slammed it down into the open. They rallied it up, and we see here they tried to smash it down on Friday. It sort of looked really bad. Everyone would have thought that would have topped. Then they bought it on Monday, got everybody long and excited, smashed it down again. And then on Friday, they smashed it hard, rallied it up on Monday during Australian time, just because it's the illiquid market, smashed it down on Monday and got it back down into this area where it looked really bad on Thursday, looked really good on Thursday. Then they bought it on Friday. They made it close lower on Friday, like everything's going to go straight through the toilet. So first thing they do on Monday in Australian trading time is they buy it. They rally it into Friday. Friday looks great. They close it well on Friday. Then on Monday, they squeeze everyone up to be long, and then they slam it down again into Thursday. Friday, they start buying it again. Monday, they slam it. They push right up, slam it down. We're getting these turning points around the Friday-Monday relationship. Again here, over here I said, I wouldn't be buying it on the breakout. Over here I said, you probably have to take profit, which we did on the Dow part profit, and then they rallied up again. So it's what would be called a classic manipulation, and they're very, very good at this shit. And it's become better in the whole year. And the reason for that is, I think, is interest rates have not been going up in the US, or sorry, going down in the US. And I'd like to hazard a guess that the markets are returning more to normal than we have seen them in the past. And if there was money coming into this US market, they would be well higher. So the market here has to stand on its own merits and go up or down correctly. So at the moment, big choppy range. I actually don't expect it to break through here, but if it does, you've probably got a pile on board. Is that unclear or clear for people? We'll look at what the E-mini is doing. We can see the E-mini has just gone for a run, and it's popped a few stops. So they'll be very happy about popping some stops. So I would be hazarding a guess by the time it opens tonight, they'll be ready to sell it and drive it back down to 2075. This is just what they do when they're doing what is called distribution. Excuse me, I can't see Dawn in here, so I do want to make sure she gets in. I don't know what's happening, whether she's okay or not, but I'll just send her an email. Just a second. So the upshot is my belief we are still likely to see higher stock market prices in the longer run, but we're being played with cat and mouse for hopefully a pullback once everyone gets really, really bearish. And the bad point is below 2060. Okay, Cindy, that link's supposed to work. I think you're in here, so I'll ignore the email that you've just sent me if that's okay. Okay, so what do we see with some of the other markets that we look for? We'll just take ourselves out to the German DAX, and we see that topping period here in the S&P 500. That actually comes in this week, the 22nd, which is curious to me. So this is daily, so its topping area tends to be early May for a dip down into third week of May. Let's look at some of the other markets. NASDAQ, which I haven't followed, we haven't talked about yet. We talked about that rallying into late May with a move into early May first and then backing off. Let's look at the Shanghai and share it. I think I've got that somewhere. This is a different system. Just 1 second. I've got it. The seasonals goes up into really into last week, and we saw that skyrocket. I'm worried about what the Chinese market can do from here. I think it's more likely to pull back for the reason that they've started to decrease the allowance for margin lending. And it's a command economy, and basically over here, most Chinese were told to buy the stock market, which they did, and they've made lots of money. And then over here, they started to open up the stock market to the West, which meant that basically the Chinese created one of the best manipulations, or at least scams known to man. They bought the stocks and then sold them to the West. Pretty smart, really. However, at the moment, they've said no margin lending, so they've limited the margin lending. We've seen a doji on the weekly bars so far, so it's confused. I would be inclined to not be too excited about whether it's going up or down at the moment. You can see the expanding triangles, which indicate the manipulation, well, at least show the effect of manipulation. It's been bought back today, and so you need to watch this little line here, this little double bottom below 41.88. Should it break down, expect down to 4,000, the retracement area. The other one we always watch is the German DAX, isn't it, really? What sort of seasonal pattern does it have? Now this is updated for today, and we can see that I think, while it might be going to new highs eventually, it's probably going to be capped at 12,207, and it's confused tonight. So you'd think that it would have gone on with the job after having that inside day, and if it doesn't, that's curious. Now drop down and look at the seasonal patterns. Seasonal patterns tend to top out in early May for this, and we'll just go back and check the history, and it has a bit of a pullback. There's early May, and it pulls back, and we can see here this whole area. Forgive me, some of these things I don't really use. Sort of tends to pull back. I'll use this one. This starts off in, so you can see the seasonal pattern is for it to start to roll over around a little bit later than early May. This is June. It has a rally into mid-June and then backs off. So there's probably more legs in the DAX for the not too distant future. But then after that, it's got the potential for a back off. When you see a bar like this, usually it comes back one week and then it proceeds up, tries to retest either this point or the old top, break through the top. If it breaks through the top, maybe it's got a bit of a chance of a break back. And so my German DAX pullback, if it comes, if it's going to come from now, and I don't think it is, I think it'll spend more time trying to churn in this pattern here. But if it does pull back, 11,250 is the possibility. So what have we got here? Let's look at the UK FTSE and see what its cycles are doing. It's been holding up pretty well, I must say. Now, seasonally, it likes to top in early May. That's why we've sort of been trying to go long. Notice there has not been a new weekly low. So the rotation went from the German DAX into the Euro stocks, into the Italian MIB, and now finally the FTSE is becoming good. Now we're long on the FTSE, and until it really gets below 69.75, then I think the FTSE is okay for a week or so, a couple of weeks. Is everyone getting the flavour for this? Where can the FTSE go to? Let's look at it on a bigger scale. I was saying it's going to go up 50%. I think that's still a valid idea, given that when we look back, we see it breaking through those old tops, coming back down, retesting them, and not going on with the job. The immediate logical target is 74.36 on the top side for the UK FTSE. So if you're carrying that trade, stop can be around the 69.50 area. Closes below there, get out. Otherwise, you've got another couple of weeks up your sleeve. We'll have a squeeze at Euro Stocks 50 on the same perspective. And I always don't know the code on this one. Stocks 50. Okay, so this is the Stocks 50. Again, tendency into early May. That was ignored pretty well the last time. Maybe it will give us a chance this time, but generally the rally goes from March, which is around here, into early May. So if you wanting to buy the Euro stocks, it's still okay to go. Let's look at the Hong Kong index, which is one of my preferred ones. This isn't the FTSE, but it's the Hong Kong index, and the data here is scanty at best. Let's see what it does. It likes early May also, and then a pullback for a couple of weeks, and then starts up again into September. Let's see where we've got the Hang Seng, whether that's coming into play. Hang Seng index might have a bit more data. Again, a dip, which is right on time last year, a dip, which was right on time this year, and a rally into the second week of May. We've seen a bit of an outside reversal period for the Hong Kong Hang Seng, but I don't think that's anything. It's really more, it's like the Euro Stoxx 50. It's sort of the outlier from the main game, which was China. So it might have a bit more strength in it. And you can see here it bounced ABC. So we've got some patterns that call it 31,314 on the top side. 3-bar swing is down, it reverses at 27,969. So I still like the Hang Seng, even though it has had a bit of a pullback. Let's rotate back down. So we've got the year of the goat or the sheep still working for us. So Hang Seng was actually today, on Monday, was back into a value buying area and they took it up higher. So you probably want to chase that. So the Asian is on the way. We also see the FTSE as being, the tail end is good. We've been looking at for continuation waves. There are no continuation waves out there. The bull horns and bear pause warnings. We have 528 stocks, up from 258 last time or thereabouts. The numbers are strangely similar, but the bullhorns are in realty, medical, financial, stock like 3M, the Direction, Russian, Bear, and Tata Motors. Now, just for fun, I want to have a look at Tata Motors, TAT. No, it's not called Tata. There we go, it's called TTM. Tata Motors has been knocked down over the recent times, which is probably a good reason to think about buying it. I believe they do jags and things. We see that they get, the seasonals get turned. So here's what happens. If it breaks through $45, it'll become interesting. You can buy it with a stop at $43, hoping for about here, which is $48.88. The other one I wanted to look at was the Russia ones. And this is the Russian directional bull. Now, when does it normally cycle? Late May for a rally into September. So you might consider this one if the data is data's not that good. Let's look for a better Russian index. Here's the Russian S&P, Spider S&P Russia ETF. And we haven't got a lot of Russian indexes that are given here, and I'm not sure why, but we've seen a good rally in Russia, and the actual, this $20 area is important. Cyclically, on this one, it says it likes to roll over. That's an ugly thing to do, isn't it? I don't know what it's doing here. Some strange things going on with the charts here. Okay. No. Something's going on. There's a bug in the system. But otherwise, Russia. If you're long Russia, it's had a good run. Best idea, maybe bank some cash. Let's go through the next one. We have some bear pause warnings, and that one was direction Russian bear. I looked at that too quickly. Yeah, the bear one. Russia's running out of puff there. So we've seen also rises and rallies in crude oil, etc., which we expected, and Russia benefited from that. So if you've had a good run in Russia, maybe take some cash. 617, which is little change to last time. We have bear pause, and quite equal to the bull horns warnings. We have things like Barrick Gold and gold stocks in general, petroleum and energy, e.g. Apache and BP, Schlumberger, which is, I believe, a big oil well service company, Exxon Mobil, and Yelp. So let's have a look at some of those. Exxon in particular, which Zoom is unusual, is an Exxon Mobil. We've seen it pull back down nicely. There's been some good patterns in this one. It's also banged off this point. If it can close again above, say, $87.40, then you'd be looking towards $90. So that's of interest. The other one that we want to have a look at would be Schlumberger or BP. Choose. Is anyone? Give me the first one that comes into your mind. Schlumberger or BP? Who's most excited about that? No one's excited about either. This is terrible. BP. This is BP. This is a yearly chart on BP. It had all that problems before, but guess what? It never even really broke this old low back in the 2003 period. So it's been okay. It's been clawing higher on decreasing volume. So what I would say is, if you're long this, have a stop at $37. And the best idea would be to think about it getting back up to $44.86 before rotating to the downside. So it's maybe got a little bit more up the sleeve. Here are the times and trades for April. We were looking to buy CVX, Chevron Texaco, mid-February till May, June, adding in late March, adding in mid-April. And CVX, let's see how that went. And the January, mid-Feb was here. And it sort of was okay, but we've been seeing it add and run. So on the daily charts, we'll have a look at that. It's been a good move on the daily charts. And it's now till May, June. It's still okay. You might want to shave a little bit off next week if you've taken this. Altria, and we're not going to look at these ones. We've got running out of time. Mid-April to late August, so that's, you might want to look at that. AT&T, this code is T. See how that's gone. And it's sort of been a little bit uninteresting, so you might want to raise your stock to $32.40. Coca-Cola, mid-April to run until June. Let's see how that's going. That's been a bit uninteresting as well. And mid-April, right on target. So if you thought about buying it, you can do so and have a stop below, say, 40.10 and hope for 41.60. Major market index will ignore Occidental. That's Occidental Petroleum, I believe. And it's looking good too, and you just need to stop it. We need to stop it just around about the $72 mark, and hopefully it's going to work its way up to 90 by early June. Pepsi, blah, blah, blah. QQQs by mid-April to early May. Schlumberger by the week after Easter until the first week of May. So that's coming into the zone where you want to be thinking about taking profit if you took that. So this is Schlumberger. Here we go. So we took it after Easter, which is around here. So it's been cooking quite well. So you might want to start to ease some out between now and $100 and run your stock somewhere around about here at $86.73. Cisco, SYY, Verizon by mid-April to early August. We've got that. So here's some times and trades into May. This is the new batch. These are the batches that you might be looking to take profit when it's coming into early May. Starbucks. And Starbucks, I don't know why. Maybe they're all buying iced coffee in America. Why it rocks and rolls. I used to be addicted to it. When I go to America, I used to have their Starbucks, and I couldn't work. Starbucks, one of those Grandi things, the iced green tea. I can't have coffee, otherwise I go into outer space. But the look at that. That's a trend, and it's been doing well since 2009. So 53.70. So if you're thinking of buying something, Starbucks has great trend consistency. You're looking to buy third week of May for a rally into early June. QQQ also appears to be looking good. QQQ is related to the NASDAQ. Notice it just keeps on keeping on. Great trend consistency also from 2009. PowerShares QQQ Trust just keeps on going. So think about that one. Priceline, April now into May 19th. So let's have a look at that. PCLN. Again, this is a NASDAQ stock. NASDAQ stocks have been running the world. It's technology, come travel. And notice the pattern, ABC. There's maybe a little bit more churning to go into it, but you're looking for $1,816.23 target. And Commander Kirk, he certainly will be rich by then, if he's still alive, William Shatner. Same. Now, where would you put your stop if you're buying this? You probably need to stop below 1,086. I love it. Verizon, coming into the time period where we want to get some interest going. We'll be doing the ASX soon, 73.40 top side. It could have gone out of 42.38. If you are buying it, you probably want to buy it more on a break above $50.67. Stop below 46.70, looking for those higher levels. To early May. If you're looking into the early May time frame, then you're looking at, say, $50.89. Oracle, we can board them. Here's the one I want to show you. Sell Goldman Sachs Group, early May for mid-May move. And I want to see what that looks like on the charts. I think that's fantastic. I love rubbing Goldman Sachs in the nose in the ground. A sell on Goldman Sachs, and it does back off. And when it does back off, it backs off fairly hard, as you can see in January. And it generally likes to back off before the market does, a bit like the Quarry Bank. So it'll be fun to see if this comes to fruition. This was probably this time here where it backed off. There's that little selling period back over here. So if you want to have some fun, Goldman Sachs might be the one to short. And you can see here there's this bit of a horrible triangle here. So if it is breaking back below $195, that might be something to slap. Dean Foods by the second week of May to mid-July. Altria, we talked about that. Early May, mid-September. We won't do bring out your debt or bank the cash in these ones. Conclusions, the natural cycles are turning up. Current state of equities markets not normal. We have got this churning event. Normally it needs to rally in May to get a sell in May go away. I'd prefer to see it break down, so it's all confusing. Germany also racing like a panzer, same deal. Looking for higher levels eventually, not bad to buy. Low interest rate stock to stay bid. Now, while we're here, I need to copy this link. I need to just trick my machine into thinking that I've done a good copying. And racing like a panzer, same deal. Looking for higher levels eventually, not bad to buy. Low interest rate stock to stay bid. Now, while we're here, so welcome to the ASX stock market forecast. And for Tuesday the 21st of April. Now I was saying it was important last night what happened in the US, and I've said that on quite a few occasions by virtue of the fact that it was the Friday, Monday trickery that we normally got into. Here's our disclaimer and warning. This has been prepared by Ideal Financial Group, Corporate Authorised Representative 299753 of Laruta Proprietary Limited, AFSL 338674, and Address Trading Proprietary Limited. This is general advice and does not constitute financial products advice and does not take into account your investment objectives, financial situations, or particular needs. Trading is risky, and prior to seeking advice from Ideal Financial Group, you should obtain and consider our Financial Services Guide, the FSG, and consider the product disclosure statement issued by and made available by from i-deal.com.au prior to investing. Charges may apply. Ideal's made every effort to ensure the accuracy as at the date of publication and gives no warranty or representation as to accuracy or reliability of completeness information. The information may be based on assumptions or market conditions and may change without notice. Really, this is my idea, and this is our normal forecast. We look for a March, April low, and then the market to take off. So getting out of the stock market fully is not a great idea, in my opinion. Being invested, part or otherwise, is a better idea. So this is what a normal year looks like. A normal year looks like, so this is the big forecast. A normal year looks like to have low in January, a rally into mid-April, a dip into mid-June, and then rally for most of the year into early November. Have a bit of a shakeout and then we rally back up into December. Now what's happening is the Australian dollar has been getting weaker. When a currency gets weaker, then the stock market prices usually go up, which means that overseas investors don't necessarily benefit from being invested in a country that they have not hedged the currency properly. Why is that? It works as a swing. That, you know, the Aussie stock market might be the equivalent of being at 5,000 now because it's been smashed so much by the currency. The index goes up, the currency goes down, and the Americans go, well, we don't care because your value of the index has not changed. So it's a bit of a furphy. that the governments do when they lower interest rates, or red herring. So you can all read that. These are all the alternates. And we talked about the possibility of the XFJ topping in late April and going down into late August. Now let's test that out with a graphical arrangement. See what it's done in the past. And this is really over the past 10 or so years. You can see that it dips into March and then supposedly rallies up into the end of April and then falls off. It's into July, maybe a bit into August. Last week of July, first week of August. What did it do last time? This is May, and it went sideways until second week of August, and then went up a bit and then fell over. So it's a tendency. Let's see what that means in terms of a bank that we probably have the most amount of data on, which would be Westpac. And we can see here, Westpac likes to top basically this week and then head down. What did it do over here? It topped in early May and then headed down into October. Can we repeat that particular pattern? Because it's not paying its dividend. What about another bank which we come to know and love recently, only just recently, National Australia Bank? What did it do? 2nd of May, fell off the perch and headed down into the end of November, end of the year, but really focused on this October. So again, that would be in keeping with the theory that I'm just promulgating. I don't know how to say that properly, I'm sorry. So like I'm promulgating. Also ANZ likes to roll over. It actually physically rolled over on the 2nd of May, paid its dividend, and then stayed sick till November. What did it do the previous year? Early May, fell off until June, and then rallied up. So really we could say you might get 4 or 5 weeks out of this on the downside if we're lucky. Let's look at CBA, which has got less data, but still came up with a similar result. Early May, so even CBA is not really battened for the right team, but last year it held up until the 24th of May. This year, sorry, the year before last, it held up till June. So, sorry, last year it held up till June. So CBA, I think, is less likely to roll over. The other ones, I think, are more likely to roll over and constitute badness. Now, the materials index, we've been calling for rallying to late July, August, and we now have a few things that are of major interest to me, and we'll look at FMG to see what sort of cycles it's got. FMG likes to top in February and then roll over down into May. It's a little bit disturbing, and then have a bit of a rally off and to finish itself off back into October. Again, as I say, that's a bit disturbing. It's not what we really want to see if you're thinking about buying this. But nonetheless, we have some sort of patterns that make sense for Fortescue to think about buying. Lately, it's just been milling around. A crude look at iron ore is still crude. We look at iron ore, and I don't really have enough data to generate a decent cycle analysis for iron ore, which is sad. But otherwise we have FMG, which is forming the right sort of shape. I want to see it get above that $2.03 to get it out of the way. Just one moment. So we have had higher interest rates appearing. I think the Reserve Bank was saying that, sorry, lower interest rates, talk of lower interest rates, the Reserve Bank possibly keen on lowering interest rates in the minutes. And the materials index looks like it's got to carry the can for the Australian stock market. If the financials flip over, then the Australian stock market can go sideways with a very strong materials index, and it will probably back off a bit with a weaker one. So we're in that phase of what's the cycle doing? Are we getting stronger or not? Here's BHP just popping its head up, showing a bit of signs of goodness, and $32 target, and I think $34.70 is the target I've been mentioning previously. This is okay to see. Question is whether this is just a feeble rally before it goes down, and I suspect it will be in the longer run. That the actual cycle in BHP is supposed to top in early April, hold up till early May, and then sort of just roll over a bit properly down into end of November. Let's look at Rio. Rio also tends to peak early May. So at the moment, you'd have to think the Australian stock market can hold up a little bit more into May on a normal basis, cyclically and seasonally. Cyclically, we think it's going up. Seasonally, it's going to go through some rough times. So confusion reigns supreme in this market as well. So being long is okay. Trading the ranges and buying dips and selling rallies is okay too. We also have some cool things coming up in some different stocks. We have some bullhorns warnings, believe it or not, in AMC, CBA, MIG, and Telstra. Now Telstra, if the Reserve Bank is really rigid about raising interest rates, we should have seen a jump in Telstra today. Sorry, lowering interest rates, we should see a jump in Telstra. But we don't see Telstra jumping on good volume. We see it rallying a bit. So it's heavy. $6.31 is nice to see it rally to, maybe $6.50 outside. But it's showing signs of not strength. And below $6, we'd expect $5.64. We want to talk about CBA. We've looked at that too. It doesn't like to go down as much as the other banks. We actually have some sell signals coming up in Westpac and ANZ. So here we've got CBA looking to $92.84 or $94.22. Volume is increasing as it goes down, and so I won't be too excited about buying CBA until the other ones divest their dividends, and then we can start to look to buy CBA while we get some shorts away in ANZ and Westpac. Before we move on to, I will finish the bear pause warnings. We have ORG and STO on bear pause warnings. Let's see what they've been doing. I did say that I thought at $8 that STO was not so good. It's doing this little pattern which indicates that it's going lower, eventually down to $5.72. So I'm not happy to get too excited about Santos. ORG, Origin Energy. I think this one is a little bit more productive. It's certainly got less risk on, but its maximum area to get to is around the $14 mark. So if it's up there and you've bought it, maybe sell out of some. Stop loss can be at 11.73. Now, we're not going to talk about waves just yet, but I want to just have a look at that seasonal pattern in the energies, which we've been saying was a good thing. We can see the energies like to go up into June and possibly top in August. Why is that? I guess AGL and Origin Energy get a lot of money in those time periods when they actually are pumping out energy for Australians to consume and keep warm. And if you're in Sydney at the moment, I hope your houses are okay. We had a bit of a roof skylight blow apart today and destroy itself. We have a really, really high ceilings here, and it made the biggest noise when this piece of the sort of diffuser on the skylight fell off and smashed in half. You know, walk-in wardrobe is just going boom, and there's lots of wind blowing through it, so it's going to be a bit cold in the bedroom tonight if we're going to close the door. What we see here is the energies complex. We've got a rally to early May, so it's still okay to play energies till June. This pattern is suggesting 12,000, which I can't argue with at the moment. So energies, we should still be looking to buy dips. I'm more suspicious about Santos than most other energy plays at the moment, though. Let's have a look at the healthcare index. And the healthcare index is something that doesn't seasonally do what you'd expect it to do. It'll top in December, end of December, early January, and then go sideways until March. Now, what it did here was it topped in March and then went down into August. So that was quite a good decline. So far, we've seen a top in March, a little pop, but it didn't go on with the job. So maybe there's a chance of this repeat into August. So I haven't been all that excited about the healthcare index. I think they're fully priced. But otherwise, you know, you can't get too super negative on it because that's what's been generating lots of money for Australia. And here, notice here on the dailies, not bad at all. You know, not dead yet. Certainly dead, probably below 19,300 for maybe a week or two of decline again. Let's look at the gold index. Now, the gold index has been touted as making lots and lots of money. And we can see that it's doing well. It has a tendency to really be weak to top in February and be weak into June. And I know there's lots of people trumpeting about how good gold is, but reality for me is gold price is still no good. And look at what the gold index is doing or has done in the past. 3,100 as an important resistance level. 2,750 as an important resistance level. So I would say it's probably going to, at some time in the next couple of months, visit down to 2,000 or just above there, 2,200. So I'm not too pulled up about it. Let's look at the telecoms index, X2J, see what sort of cycles there are in there. We can see that it topped on time, it bottomed on time. But what it does here, let's look at it, holds up into May and then dips down and has a torrid time of it into October in theory. This is a detrended trend. So when we're looking at it, we're not looking at this, we're looking at how it goes against its own trend. So February down into March, a rally into May, and then some illness. So I don't want to get too excited about this, but what we do notice is, let's see how much time it's spent going sideways and whether it's done much of this before. So when we look at this, we see that this time period, it looks actually weaker than at any other time period in the last post-dividend time period in the last, this is the post-dividend time period over here, if I remember correctly. So this is the weakest that we have seen so far for this amount of time, and usually it's trying to break through. So the index itself is not as strong as you would think, and it really needs to clear through 2250 to get healthy again. In terms of time though, it is around the time where we sort of pop out, break back for a couple of weeks and then start up. Pop out here, go up for a couple of weeks. Pop out here, go up for a couple of weeks. Pop out here, go up for about 12 weeks. Now, what happened over here? It's October dividend, isn't it? No, actually, it's here. August. So here, still showed some strength and rally. What I would say is that a breakdown after this week would not be good for the telecoms index, ACA, Telstra. We haven't seen that happen yet, but we've got to see. It's interesting that this is different. We also have a bit of a descending triangle for the people who did the course in Perth. You'll notice a descending triangle coming into play here. So a breakdown below 2150 is negative for a fast move down. But that reminds me, I'm thinking of going up to the Gold Coast and doing the Train the Chartist seminar on the Gold Coast in May as well. So I've got friends on the Gold Coast and they want to go along and learn some things. And if you're a PhD member, come along too. So so does that help in terms of the pictures that I'm trying to give you? Let's go through the waves at the moment. We have nothing for turning down. In other words, we're not at the top of wave 5s on anything that the machine can scan at the moment in terms of the indexes. The gold index, it's been saying turn up for quite some time, and I want to question that because really the gold index has this data is different. Just 1 second, I need to get out of the data right here. And You can see all of this patterns here. Nothing really has. I'll just pull up a chart and we'll do the Elliott wave count on this just to. XGD. Okay, that's all right. That scan is a bit funny. Don't worry about XGO. Times and trades last time we said to buy the ASX 200 at the end of March for run into the third week of April. That was still working when we last looked. Let's see how that went. Just to refresh our memories. We talked about buying third week of March for run up. We didn't quite make it, made it to the second week, and it's been pulling back. Third week was last week, so that was a bit of a dud trade. We talked about buying in ANZ end of March for run into third week and fourth week of April. And third and fourth week of April, and that has been not what we thought would happen as well. End of March, so end of March for run into third week. So it hasn't been working, these ones. Buy ALS, aka ALQ, and the third week of March for run into late May, early June. Now that hasn't been working either. Notice here I've been saying pattern-wise don't bother about this because it's only been doing a retracement and is negative, looking for $4 or below there. Sell 3-year bonds for run down, and we don't look at that. AMP becomes a buy. This was a week or so ago, sorry, a month or so ago, for a run into the third week of March. Forget about that. CBA becomes a buy in March to run into late April, early May. QBE continues to look for buying dips until the end of April. That has been working, still working. A little bit at risk, so raise your stop loss up to $13.05 if you're in QBE. Woodside Petroleum looking by mid-March into a run into end of April. Now that didn't work for a while, but started to recently, and it's still failing. So still not going on with the job. And why it is because it's in this filthy, big, dirty triangle. See that triangle, which would imply going lower again. These are the times and trades we were looking for that are coming to completion. One of them is just starting. If you're buying the XAO for the run into late April, you're starting to take profits, funnily enough. Selling AMP, we're going to sell late April for run down into early May, June. You can also sell it again in May for run down in mid-June. CBA becomes a buy the second week of April for run into early May, late April. NAB becomes a buy, and these finishing. So if you've been buying these trades that I've been mentioning, then you can look to take some profit. And QBE looking to take profit in early May. Westpac becomes a buy in early April for run into late April. That's why I said the share price index should do okay. So here we're going to sell AMP, looking for run down into late May. This happens quite a lot. CBA, CSL, it says to buy mid-May. So if you want to buy it, then for a run into late September, early October. ANZ, sell in mid-May for a run down for 8 days. It's only a quick one. ALS, I think we probably get this one. I want to focus on this one. I think that will be a nice one to look for because the materials will start to pick up again. they're starting to be a bit better. So ALS, ALQ start to become better around that time. The other one that we have, which I haven't put on the board, is we're going to look to sell Westpac, sell WBC, and this is terrible. I have to get this better. BC in second week of May. For a run down into June or July. That may stun a few people, but that's quite a pronounced, that's actually quite a pronounced movement that we can expect on that. The other one is that, the other one which arises nicely is Flight Centre. So look to buy Flight Centre mid-May. May for a run up into, just for, it really is up into August. Okay, next one. Let's go in to bring out your dead territory. So where have we got, these are stocks for the new people that, these are stocks that you've been holding on to and they're a bit smelly. You've probably buried them deep in your mind and you don't really want to admit them, but here's a place to have a look at them. See if we can manage you out of these. I'll give you stop losses that you can work with and hopefully, you know, so that if they are going to rally, you can trail them and work out of them. So let's look at OSL, and I don't know the code. What is OSL? Oncocell. Ah, okay. Right. Okay, there's been a good thump on volume there. So the best thing I would think with this one, I think you don't want to own it. I think you just want to, if you can at the very least have a stop below 6.3 cents. But just dumping the fella, and you can always buy it back in if it breaks above 8.7 cents. Should be heading down to 5.7 or 4.2 cents. So at the moment, I don't like the way it got thumped on Oncocell, Eugene. So if you want to, divest yourself, or if you want to just have a stop that makes sense, put it at 7 cents and try and get out of jail to 9.1 cents. The next one is EEG. And EEG is Empire Energy. And it's a bit like Santos, same pattern. I remember a stock called the Reject Stock, which I can't remember the code on Reject Stock. It's been such a long time that we've covered it. This is not good pattern. It does mean it could go to God. How you can manage that though, put a stop loss below 2.2 cents. Hope that it breaks through 2.8 cents, and you might be able to get it up towards 3.4 cents. So just manage that stop if it breaks through. Oh, thanks, Gordon. Appreciate that. It's been so long. Now this one, Empire, if you own any of it, you probably don't have much chance to get out of it because it's got so little volume. Fly specs, in fact. So what I would say is, at the moment, on the dailies, it's okay, but stop close only below 2.3 cents. Hope for 3 cents. If it can claw its way above 3 cents to 4 cents, then that's great. I'd be looking to raise my stop at 2.7 cents if it did that. Now, yeah, I'll show you that reject shop pattern. Notice here it had that same blast down and it just went sideways for a while. This is the daily, went sideways for a while, and then then the next shoe dropped. And thanks for that, Gordon. I actually think the reject shop is not bad. So you might be thinking about that rallying to 636. It's found some support there. So just as an aside, it's not a great recommendation, but here's bank the cash section. Now this section is where these are the stocks that you've had a very good run in, and you're wondering, what should I do with them? You might be talking about QBE, you might be talking about ANZ, you might be talking about CBA, you might be talking about CSL. What stock have you been carrying that you're wondering, hey, it's a bit too much of your portfolio? REG. Ooh, Reg Health. Yeah, it has been it's probably coming back to $5.20. That's no surprise for anybody who knows what I do. The question is whether it's churning. So you might be able to get out of some, Antonius, back up to 575. Let's see where you'd expect to get back to. Pattern's not so good at the moment. Ooh. Ooh, it's not that good, really. Volume's not terrible, but I think you'll see 520 before you'll see 565. Certainly if it breaks $5.06, $5.06, it's got some problems, but I think you'll find it'll come back down there and hold the 520 area. So if you're thinking of banking some cash and you get a flick up to 565, you might do that and buy at 520. But overall, still got the possibility of higher. Anyone else who needs some cash banking? I think there was JHC. That's a mess, really, isn't it? Volume has not been all that good on the way up. It's pretty well cash banking time there, Eugene, and stop loss below here at $2.54. Probably best to do the stop loss, and maybe it blows its lid through 273. But I think if you've had a good run at 253, the volume has not been that great in these ones. The other one, which is CTD, and I talked about that on the weekend. And notice here that it's had some heavy volume on it, so it's probably coming back down to $8.68 that I would think about it down there, and looking for it towards 50. If you can get it in here, buy some at $8.68. Stop would be at $8. It is probably going to get down there, so banking some cash up towards 11.20 would be a good thing. G'day, Mike. How you going? NWF, which is Newfield. Good pick, man. Good volume. No reason really to bank cash unless it gets below 78 cents. Where are your dreams of aspirations? Really? I'd say up around about $1.30 is where you could expect this to get to. Maybe $1.35. So somewhere in that zone. No need to bank the cash at the moment. No need that I can see there. Just really trade management. Stop probably best at 91 cents. Nice trend on the dailies. No need to jump out of that one, Mike. Another good pick, Mike. BLD. This is Boral. I do want you to bank some cash up here, but not a lot. Hope for the $7.15 on the top side and manage it by having a stop at 587 there, Terry. That's in the longer term perspective. You'll notice I'm looking at the monthly time frame. On the weekly charts, we can see a little bit of a pullback. It has locked into something. That's why I say, you know, if you bank a little bit of cash, it's good. Stop to bank the cash would be 635. You could exit there. Look for it back to 590. And then eventually back up to that 715 or even 771. Next one is LEP. So it's a part profit takedown. LEP, which is Ale Group. Great name for Ale Group. LEP, I don't know how it's that. Side-by-side meeting lines, not dead yet. I'd put a stop below 338. And if it got triggered, you'd be looking to buy back in probably around about $3. On the weekly charts, we can see, again, that stop 338 or even 352 would be good. No need to bank the cash on this just yet. You may get to be able to do that at 380 or 416. Back on your bikes. These are the ones you might have taken profit on, you might have been stopped out of, but you got that feeling that maybe I should be back on my bike trying to get back into that. Which ones would you like to get back in on? JIN, Jumbo International. Oh, that's a blast from the past, Mike. Jumbo International. Oh, you remember when you stood up the ATAA and said that I nailed it from there? And, okay. So it's come back down. Yes, it is time to get back in there, Mike. Yes, that's good. Volume's been good. It's breaking back up through these points. You can have your stop loss below 87 cents. In fact, I think that's a PHG trade. Back up to $1.76 and maybe $2.36. I have no idea what it does, but it's certainly done an ABC pattern, and you buy more above $1.34. Target first instance would be around that $1.26. Stop loss if you're going for on the weeklies, and Mike, I know you had good time out of that one. Stop would need to be at $1. And if you're going on the weeklies, it's nice to see that volume, but probably best if you keep it a little bit tighter than the deeper target. Now, where are we going next? Here's some conclusions. Now, 6,000 is a big level. There's no doubt about that. The problem with it, in my mind, breaking above there is that the banks are in a bit of trouble. And it's only three of the banks start to become a worry once they've paid dividends. So we're getting into that time period where cyclically it says it's going up, but pattern-wise and seasonal patterns show that the dominating forces of the banks aren't going to be holding it, giving it a lot of things, a lot of strength. So ANZ, Westpac and NAB, we expect the last hurrah into early May. Maybe not so Westpac, but certainly NAB and ANZ. The energies have run well and we can expect a bit more. The materials are trying to turn up, And I think that's where the value will be, because they've been sold so much. There are so many people who are out of the material space. Generally, the healthcare is not so solid. Property is 6 of one, half a dozen the other. I want to have a look at what property did today, because I didn't get a chance to really spy what it did. It should have jumped quite well with the Reserve Bank meeting minutes, and it did, but it failed to go on with the job. So that doesn't give me a lot of confidence about where it is. The smalls were looking good this morning, but flaccid, 21.18 or 22.50 on the top side. So commodities are US dollar dependent, and at the moment the US dollar is starting to rally again, and that could mean that commodity prices don't do so well. I still think you stay exposed to equities. I don't think you go to cash at all just yet. I think you do that below 5,500 if it comes. We could get a turn down to 56.50, 57.50 down there. I think you'll look to buy that once we've had a bit of a washout. Thank you all for turning up, and I appreciate you coming along. The recording will be up once I've worked out how to put it up over the next couple of hours, within the next probably 40 minutes or something like that. Are there any final questions that people would like to ask me? Tomorrow night we'll be doing a gold webinar. Invite your friends along. It's a free one. I might fill a little bit of webinar out after tomorrow, but we'll have a freebie on that one as well. Do you have any specific questions? I think, David, you've asked that question for tomorrow night. And thanks, Stephen. And wish you all well, and thanks, JR. MPL re-entry price. Okay, I think that's a good question. I think it's around $2.10 area last time I looked. I think you'll see it down towards $2.11. That would be where to get in at. Now, while we were sleeping, we thought that they would give MPL a few more months, and obviously the professionals have driven it up into this area. This is a five-wave structure to the downside, which doesn't augur well. 1, 2, 3, 4, 5. Maybe $2.10 before a rally back up to $2.40. That's particularly disturbing. But down there, Eugene would be the go with a stop below $2. Thanks, Shane. Thanks, everybody. Have a good night and enjoy yourself. So I hope I've actually recorded this. Yes, I have. So everybody have a good night, and talk to you in the morning for the PHG gold and silver people. See you soon. Good night. Close the room down, and thanks, John Robertson, for buy a deal. And if you give him a call, or want to email, thanks, Kim. Email him, jr@i-deal.com.au. Thanks. Cheers, bye.